I did my first $100K using just 2 indicators, and in the next minutes I'm gonna show you exactly how to set them up. And most importantly, why mastering less indicators can actually help you win more trades. My name is Joma and I've been trading for the last 7 years. And now in this channel I want to show you what I would like to know when I was starting in these markets. Stick around to the end because what you're about to see could change the way you trade forever, starting today. First of all, as I've said many times on the previous videos, less is usually more, especially in trading, because if you're starting here or you're an experienced trader, you definitely don't want your chart to look like this. And why? This is because too many information. If you have the specific good amount of information, this can make you a really good trader. But if you have too many information coming from all sides, this becomes from good data to noise. And if you're here, you're taking trading seriously and you are definitely willing to avoid as much noise as possible, okay? Because it's not good to have one indicator that tells you to do something and then the other telling you the opposite thing, because this is not efficient and will make you lose a lot of money. And trust me, because I had this issue when I was starting the first year and I was young, not experienced, and I was trusting everything that my indicators were saying, and I was like, okay, I'm gonna use this indicator, the other, and finally all my trades were lost. So well, first of all, I'm gonna show you how to set up my trading view, how to install my two indicators, will be the RSI and the EMA. Okay, finally I'm gonna explain to you how to use my favorite tool here, which is the Fibonacci. So stay tuned because now I'm gonna share you how to install all of them. It's so easy. Okay, first of all, you have to come here to tradingview.com. You can pay for it, but it's actually also a really good, it has really good free features, so it's pretty okay. So I'm gonna come to an empty chart. It's so easy to set up those indicators. You just have to come here to indicators, here in the top, in the left, and we are gonna use two indicators, which is the EMA and the relative strength index, which is the RSI. You can spot it here. And finally, we'll be using also the volume, but for me, I'm gonna explain it later, but for me, the volume, it's not an indicator. I think it's way more, and it's crucial. Okay, if you're not using volume for your operations, you're definitely doing something wrong. Okay, so these are my three, or let's say two, must indicators. Okay, and I'm gonna explain to you how it works. Also, I wanted to say, okay, there are a big amount of indicators. Okay, there are tons and tons and tons of indicators, and people that are trying to make you think that they are selling an indicator made by God that will tell you when to buy, when to sell, when to place long, when to, and even will tell you the leverage you have to put on that operation. I just wanted to say that this is bullshit. Okay, this is noise, this is fake. Never buy, at least in my opinion, I've never seen a reliable, good and profitable trader who bought a indicator made by someone from the community. Okay, so in my opinion, I'm not buying any indicator. It makes no sense. Okay, especially for those who are sold by influencers, because it makes no sense. It's literally noise. Okay, so in my opinion, volume, which is not an indicator in my opinion, EMA and RSI. So let me put it, and finally, as I said, I'm gonna share with you another tool which is not an indicator, but it's the must for me as well. It's a really good one. Okay, first of all, let's put the volume. The volume, it's so easy to understand. Okay, for example, here you have to take a look at everything in this chart to understand the volume. First of all, just take a look at here. This is, let me just hide this. This is Bitfinex. Okay, Bitfinex is a centralized exchange, and we have the volume which is linked to this centralized exchange volume. So it means the quantity of people that it's actually trading Bitcoin. For example, just take a look at here. We are actually analyzing on a daily basis, so our candles are daily candles. So the volume, in that case, it's giving us a lot of information, and so valuable information, okay? It's so valuable and so important for us. Let's say, let me use a comparison between two candles, okay? Okay, let's say this candle on in the 10th of July of 2025, we can see that here it had 1.64k Bitcoin volume, okay? What it means? It means that this day the total amount of money that was traded was 1.64k Bitcoins, okay? If we keep in mind that Bitcoin was in that day around 114k, we can say that this day the total volume was approximately, let me say, this was the total volume, like 200 million, okay? So the volume, it's so easy to understand. As more volume, more reliable is going to be the movement, okay? If you take a look at here, this candle in the 14th of July, this candle was also so bullish because you had really, I think that this day we had also even all-time high, okay? It was a really good candle. I think that it was like 3% candle on Bitcoin. It's a really good candle, but the volume was way less. I think it was 1/3 or 1/4 compared to the 10th of July. So what it means something so important for us as traders, and is that this candle was way more important than this one, because this candle means that a lot of people was trading in that moment and they decided to push the price up. So you have to understand something that it's so important for you as trader, and is that as much volume means more people trading, more people deciding the movement that Bitcoin is gonna have. So if we have like a lot of people who's actually trading Bitcoin, and this big amount of people decide that Bitcoin has to go up, and especially this big candle, it means that the market is really bullish. But if you see the comparison here, that Bitcoin was going up, but it was decided by much less people. So the movement was far weaker, okay? If we take a look, that the movement was big, but it was not that confident, and also really, I mean, much less volume. So this kind of candle here was definitely much weaker, okay? We can see the comparison on, I mean, a lot of different spaces. For example, just take a look at here, another candle on the all-time high. You see, I mean, we had an all-time high here, but it was followed by a big bearish candle, because the volume was not that big, okay? If you take a look at here, most of the big movements of Bitcoin are also powered by a really big amount of volume. Just take a look at here. When we entered this small downtrend on February of 2025, which was around like 56 days, it was started by 2 days of really big volatility, big volume, and this big volume decided that the price of Bitcoin was gonna go down. And as you can see here, Bitcoin went down for 60 days till the price went up again. And when it went up again, if you take a look at here, it was with a spike of the volume, okay? All the big movements are preceded by a spike of the volume, and that's the reason why I think that volume is not an indicator itself. It's a basic tool that any trader should be using every single day. You cannot take an operation if you're not using the volume, and it's so easy to understand, okay? Because imagine that, for example, here I'm deciding to place a long. If I take a look at the volume, I see, oh my god, I mean, the price went up so hard, but the volume, it's really low. It means that there's not a lot of people trading, so this movement maybe is not as reliable as this one, okay? And this is something that we can apply to the whole market, to every single asset, and I think that it's definitely useful for you. So now I'm gonna explain the other indicators, the EMA and the RSI. As I've said many times, and I said also in the introduction of this video, I haven't been using many indicators the last few years because I decided and I realized that less is usually more, and especially here because too many indicators, maybe some of them also too complicated to understand, and if you're starting, you don't want to have like a chart full of information that you simply don't understand, because you're gonna get lost, and if you get lost, you're gonna lose a lot of money, okay? So trust me, I mean, you don't have to pick my indicators, just pick 1, 2, or even 3, and that's it, not more. So alright, let's go with the first indicator, which is gonna be the EMA, okay? It's gonna be easy to set up. We come here, we put the EMA 20, 50, 100 and 200, and here we have, okay? As you can see, this indicator, it's drawing some lines that are actually representing the average price of these assets, in this case Bitcoin, in the last 20, 50, 100 and 200 days. So why is that important? It's important because it's actually giving us a lot of information, especially about the trends, okay? And it's so easy to interpret this data, and you can see on the last bull market. In my opinion, I usually only use the 200 daily EMA, but just because as I've said many times, I use this indicator especially when I make swing trades, and I use the EMA indicator to discover which is the actual trend of the market, okay? If you take a look at here, this EMA was below the price and it was showing us that the price was bullish, but when the price dropped below the average, you can see that we entered a small bear market on the bull market of 2021. You can see here that we had I think that it was all the summer till from May till August, end of July, and you can see here that when we had this cross, everything fucked up, okay? Everything literally fucked up. But when the price crossed the line again and went straight to the top, we had the final part of the bull market of 2021. And I mean, I don't really rely this kind of strategies, but sometimes there are something really useful when we talking about the EMAs, and it's called about the golden cross, okay? The golden cross happens with the EMA of 100 days and 200 days, and we can spot it just right here, okay? You can take a look that usually when we are entering on a bearish trend, the average of 100 days usually is gonna be placing above the trend much earlier than in that case the 200 average, but that's, I mean, something so easy to understand, okay? But there's something called the golden cross of the average, okay? And it is called that when it happens, something really bullish is gonna be happening in the market, okay? And as you can see here, and also in the opposite direction, okay? You can see here that we had this golden cross in June of 2021, and we had approximately 18% down. And you can see here that we had also this cross in January of 2022, and it was, well, introducing the bear market, okay? But also we had this bullish golden cross that was preceding a 72% trend up in the Bitcoin price. it was useful. As I said, this is not something that I usually use, but if I'm talking about swing trading, something in the long term, it's actually pretty useful, especially if you're holding your assets, if you're buying for spot. This is definitely useful. And as you can see here, when we had the last golden cross, but in the downtrend, you can see that we entered the cold and not really good bear market that was for about 1 year, since the next, well, actually a little bit more than 1 year, till we had the next cross, and well, as you can see here, never happened again, and here we are. It was really close sometimes, but we're still on a bullish trend. So as soon as I get this, and it's actually pretty far, so as soon as we cross this line, I might be a little bit afraid of having a bear market. As I've said, this is not something mandatory. This is not something that happens every time. Okay, so if you take a look at here, we had one golden cross. This was maybe indicating the bear market, but we had another cross and we had the final part of the bull market. So it's not something that happens every time, but it's something that you could just take a look at it. Okay, it's something that you could just take a look at it, and it's maybe useful for you. Okay, and to configure this, to set up this indicator, it's so easy. If you choose this EMA 20, 50, 100 and 200 in the indicator setup, you don't have to change anything. It's actually ready for use. So, and actually the same with RSI. That's one of the reasons why I choose these two for this video, because it's so easy to understand. Okay, and now I'm going with the second indicator, which is actually my favorite. Okay, I think that it's much better in my opinion than the EMA's average, and well, it's my favorite. It's the one that I use every single time on the big trends, on the high time frame and the low time frames. I use it every time because it's pretty useful. It's not giving us, like, as I've said, there's no indicator showing us the clear direction of the market, but those indicators can be useful when we are like mixing gap and how to interpret this data. Okay, so I'm talking about the RSI. Okay, this is called the relative strength index, and to put it in your charts, it's as easy as going to indicators and writing relative strength index, and it's gonna be appearing here. Okay, it's so easy. Let me here in the RSI I put like some changes on the config, on the settings, so it's gonna be more reliable. Okay, and these are my settings. You can just copy it. I usually change especially the upper band on the lower band, because for me the default settings are maybe a bit too much, so I like it like this. Okay, so you can just set up and you have it ready to use. So the question here is how I use the RSI. You have different ways to use it, but let me show you something. The RSI actually can spot some not correlations in this market. Okay, so the RSI at the end, it's an indicator that shows if a price is going up too fast or down too fast. It moves, as you can see here, between 0 and 100. And if it's above 70, maybe this asset might be overbought. If it's below 30, this asset might be oversold, and if it's between 40 to 60, it's neutral, no strong signal. So actually traders use it to see if the market is going too hot or too cold, and to guess when price might change direction. So it's pretty useful for us because we can spot when the market is getting too hot. Okay, just take a look at here. Okay, when the RSI got overbought on November of 2024, you can see here that we had a final run, but after that 16%, we had another spike gap, and then we had a 31% down in that price. And if you can take a look at here, we can see something called divergence, okay? And this is really useful, okay? It's really useful. I think it's even better to spot it here because it's much easier for you to understand. Okay, to explain to you how divergences work, I'm gonna go to the last bull market because we have some clear examples on how it works, okay? And it's actually pretty interesting. Divergences is when the price of the asset, I mean the chart, and the RSI is not correlated, okay? And we can see some examples here. We can see that the price of Bitcoin on 2021 on February, we had higher low, higher hike, higher low, higher hike, higher low, higher hike. So we had a clear uptrend, okay? Let's put it like this. We had a clear uptrend. But if you take a look on the same moment on the RSI, we had a downtrend, okay? This is a divergence, okay? This is a divergence. And you can see what happened next. The price crashed approximately 53%. I mean, I don't know if you're new to the market, but if you're not, you might remember what happened those days. I mean, that was a complete disaster on the market. A lot of people lost a lot of money. So that's one of the reasons why, in my opinion, using divergences, using the RSI, it's so useful, especially when talking about divergences, okay? Because about the oversold and overbought moments, you can see that we can have overbought moments, but continue going up, okay? If the asset is overbought, it doesn't mean that it's gonna stop going up and you're gonna see a crash, okay? It's not immediate. You can see that we had from the moment it was overbought till the moment it was it crashed, it was about 95 days later, so 3 months. 3 months that you could got a lot of money, a huge amount of money. I mean, 113% revenue on Bitcoin. So this is another tool that you need to know how to interpret. And actually the opposite happened here. You can see that the RSI made a bottom and we had a downtrend on Bitcoin which bleed for 27% down, and as the price was going down, the RSI was going up. And as you can see here, we had also a little compression here, and it was so easy to see. And as you can see, what happened next, it was a 132% revenue on Bitcoin. And what happened next? Here we had two tops of the market. We can see that it was one top, second top. What happened on the RSI? Divergence. On the same moment. What happened next? Crash. So that's one of the reasons why I think that RSI is a really good indicator, because if we take a look on the back testing, we could have saved a lot of money just taking a look at it. Obviously, it's not your Bible. If the RSI is overbought, just wait. I mean, it can go up a little bit more, and actually the same if it's oversold. But usually it's a reliable source of information. Take a look at this. Here, going down, divergence, straight to the top. It's actually happening every single time, okay? And for example, if the price is going down and the RSI is going down, it's because there's a good correlation between the price and the RSI, so it's giving us less information. You can see that it's actually neutral, it's following the same path of the asset, so it's okay. But if we see that we have no information on the daily chart, we can go to the weekly chart and see what's happening, okay? We can see that we have a small downtrend, okay? You can see what's happening here. On the bull market, we see that our peak was on April 2024 and it's been going up, okay? And during that time the RSI is going down, so we have a small divergence here, okay? A good source of information for you. But it's also going up here, so it means that we're having a compression. And what happens after a compression? A big movement. So we have to pay attention of what's happening next. Okay, so well, I hope you like this video so much, and I think that these two indicators are really useful. In the next video, I'll try to explain to you my favorite tool for trading, which is called the Fibonacci retracement and expansion. Okay, but I'll let it for the next video because I think it deserves one special video for it. So now you know the indicators that help me and can help you make your first $100K. And I can tell you that if you're a good trader, you don't need more indicators, okay? But here's the truth that no one talks about, and is that most traders who master this strategy still lose. Because what really separates the winners from the losers isn't just the strategy, it's the way you execute, how you adapt, and how to stay consistent. Without the right mindset, risk management, and guidance, even the best system will fail. It happens every single time. That's why I created a private Discord community for free, where I'm giving away a 75-page trading book for free. And more importantly, where I will share my best trades of the week and break down exactly how I manage them. So please, you have it on my description below. Click the link, join the community, grab your free ebook on Discord, and start seeing how real traders operate. So thank you so much for watching this video, and I'll see you inside. Thank you.